This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend Podcast. It was a shortened trading week thanks to the Good Friday holiday, and yet jam-packed with lots of U.S. economic data, including the Fed's favorite take on inflation. Check out all of the data and analysis on the Bloomberg and at Bloomberg.com.
For us, we got a take on the economy and health of the lending environment, courtesy of two bank CEOs, one super small and one a large cap publicly traded company.
Also this week, tons of Boeing news. Changes in the C-suite, including CEO Dave Calhoun stepping down at the end of the year. A take on Boeing and much, much more from Grace Blakely, the author of Vulture Capitalism.
All that to come. We begin, though, with former President Donald Trump, who was in the news this week because his first criminal trial is set to start April 15th in Manhattan. And his bond was slashed by more than 2/3 on another lawsuit, his New York civil fraud case, that handed him a crucial financial lifeline. And then there was his fortune on paper, vaulting thanks to his newly public social media company. There's a lot of news, Carol, on the former president and current Republican frontrunner. I mean, he's pretty much locked up the nomination. Not officially, but it's him.
Safe to say. I got to say, though, what caught our attention about all of this is that a group of very well-known Wall Street and Silicon Valley folks who are either overtly or quietly embracing the GOP nominee for president and the prospect of returning to the political turbulence of the Trump era.
Brad Stone wrote the story. He's the editor of Bloomberg Businessweek. He's also the author of several books, including a couple on Amazon, The Everything Store and Amazon Unbound. Brad's story featured in the new issue of Businessweek magazine. It's available on newsstands, on the Bloomberg terminal, and at Bloomberg.com/businessweek.
I was calling it the revolt of the winners, and this very conspicuous support among business leaders in tech and primarily on Wall Street for former President Trump. And as Tim described, there are kind of two brands of support. There's the overt support, and so you've got Howard Lutnick of Cantor Fitzgerald and John Paulson, the hedge fund owner, holding fundraisers for Trump. Nelson Peltz, Disney foil, who endorse Trump recently. And then the more subtle forms of support. Ken Griffin from Citadel saying on TV that Trump would be good for the capital markets. And of course, Elon Musk on the service formerly known as Twitter, almost every single day suggesting that he's moving in a rightward direction and hasn't endorsed Trump, but is certainly putting a lot of distance between him and the current president.
And as you mentioned in the piece, he's saying, Elon Musk saying he hasn't endorsed and he won't donate to any political candidates, but certainly a lot can happen between now and November 5th, Brad. So what happened in terms of this transformation for some of these folks over the last 4 years? There were quite a few after January 6th who came out and distanced themselves from the former president. What has happened in your view over the last 4 years or over the last year to move people back to former President Trump?
Yeah, no, I mean, I think, look, and there are plenty of business leaders who are moving in the opposite direction and endorsing or supporting President Biden, and maybe in a future column I'll look at that. But there is this movement. Another great example is Jeff Yass, by the way, from Susquehanna International, the Pennsylvania billionaire who may or may not own a portion of the company that has merged with Truth Social and given Trump a potential lifeline. He was once a never Trumper and is now certainly making some news favorable to the former president. So look, I mean, I try to diagnose what's going on here. I mean, I think there's a couple things. In the case of Jeff Yass, maybe this is very transactional. Trump has reversed his position on TikTok. Yes, is a major owner of ByteDance. I do think there's a sort of material concern here with some of these billionaires looking at Biden's economic and taxation policies and the idea that Biden raised in the State of the Union to instate a billionaire tax, to increase the corporate tax rate, to roll back the higher end of some of the Trump tax cuts. There's Biden's antitrust agenda. There's the pro-labor stance, and the fact that Sean Fain from the UAW was a guest of the White House during the State of the Union and recognized by the president. And, you know, to somebody like Elon Musk, who runs a non-union shop, these are existential concerns. So I think we can get into what some of the emotional reasons might be, but those are perhaps some of the rational decision-making that's going on right now.
And I totally get the rational side. I love when you get into kind of the more emotional side of like, these guys are disruptors and they like when things kind of it feels like unsettling. Talk about that kind of thinking and why they may be providing support for Donald Trump.
Yeah, you know, I don't want to get too far into the psychologist's office with this analysis, but I think, you know, to some extent they feel like Biden, you know, maybe the Biden administration victimized them a little bit, ran against the 1% or the 0.1%, so they don't feel recognized. I think this maybe reassessment of tech power and Wall Street power over the last decade, you know, left them feeling a little victimized. And then there's the sense of being contrarians, being disruptors. You know, Peter Thiel made this contrarian bet in 2016, and, you know, to a certain extent it backfired on him, but he got a lot of mileage out of it, and he had the ear of the president back in 2016. So perhaps some of these business leaders or billionaires see where the political winds are shifting and want to have the ear of someone who they think, despite you know, the arguments for or against, it's someone, you know, who they might think has a shot at winning the next election. And so they're trying to get on that side of history. I think probably for a lot of these folks, there are different reasons. But you know, I don't think that we can dismiss the pure capitalism here and the idea that some of these folks just see a better tax regime and perhaps antitrust regime under Trump.
Yeah, let's talk about the antitrust regime, because that is one area where President Biden has, you know, been, I think in his view, pretty successful at this point. That's certainly a part of it, Brad, but I do wonder to what extent, you know, how these folks did over the last 4 years during President Biden, because Carol and I were talking about this a little earlier as we were preparing for this, and we were thinking to ourselves, you know, talking with each other, well, it's not necessarily like, you know, yes, there was some rhetoric in the State of the Union, but it's not like there were policies put in place that actually hurt these folks who you write about.
Yeah, and I guess that's the question I had. You know, the markets are going to determine a lot of the financial success for some of these figures. I mean, you look at like Larry Ellison of Oracle, who has been reported to be dining with President Trump as Trump looks to improve his fundraising status. And, you know, like, the markets like predictability. And what we do know, again, I'm trying not to be political here in my analysis, but what we do know is that, you know, President Trump historically, and certainly it seems on the campaign trail, brings an element of unpredictability and chaos, and the markets don't like that. So I do think that, you know, some of these business leaders are trying to be opportunistic, and they're embracing an agent of chaos, and it will be interesting to see where that support goes, whether it wavers, as we get into the real campaign season where people are paying attention, and where the former president hasn't necessarily been as scripted as perhaps some of his handlers would like.
I love this line in your story, in your reporting, Brad. You say billionaires aren't all that different from Trump's main constituency of less educated working class white households. Both groups tend to see a conspiracy by far-off elites who are out to deprive them of influence, expropriate their money, and squander America's advantage abroad. Like, it's interesting to see, like, make that connection between those two groups. But I don't know. It's just kind of very interesting and fascinating. You're right. We could bring in a lot of therapists and psychologists on this one, but it's fascinating, that connection.
It's one thing that I had never seen before and don't necessarily know how to interpret, which is the sort of venom that's out there, and maybe I'm paying too much attention to social media, among certain elites for other elites, for academic leaders. I mean, this came clear in the battle against Harvard's president by Wall Street leaders like Bill Ackman. And this idea, this scramble for influence. There's a great book, which I'll recommend, Carol, I know you're a big reader, but a book called End Times by Peter Turchin, where he actually actually somewhat apocalyptically describes the end of regimes across centuries. And one of the telling tales of moments of instability has been when the elites start competing each other and battling for influence. So I don't know, maybe that's a little bit of a downer note to introduce, but
I feel like Hunger Games sounds like a sweet movie in comparison.
Don't worry, Brad. We're not going to end on that note, okay?
Okay.
It's too depressing. We're not going to end on that note. No, I'm going to throw one more.
Sunshine, flowers, rainbows.
Look, the election can go anyway. We have no idea how it's going to go between now and November 5th. But we do know that money plays a big role in politics. But does the support of the folks you write about, Brad, any idea if it actually moves the needle when it comes to what matters, which of course is turnout and votes in these swing states?
Well, and fundraising obviously does matter, and I'm not an expert in this, but from what I read, President Biden is out raising Trump, and I think that's one of the reasons why the Trump campaign has been there soliciting donations or having conversations with folks like Larry Ellison and Jeff Yass. And I don't know that any of them have necessarily stepped up. I mentioned the fundraiser that Lutnick and Paulson were holding, I think, beginning at next month. Whether that support translates to the ballot box, I mean, the Trump campaign has to be careful, right? Because you don't want to necessarily turn off your broad base of supporters, working class supporters, by trumpeting your billionaire support. So it's a careful line that they've got to walk.
Right, and also in an industry, I feel like the tech world really knows how to play well with their enemies, their frenemies that they often work with. So could they just be hedging, as you end the story, Brad, in terms of the outcome? A really great read and a really timely read. Brad, thank you. Really appreciate it. Brad Stone, of course, the editor of Bloomberg Businessweek.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
There's a problem. We've got a plumbing problem. And Carol, it's a cost that all of us are paying for. Despite an above average salary, the pace at which the U.S. is minting new plumbers is lagging retirements. The widening plumber deficit matters for households facing hefty charges to fix a leak. I think we've probably all been there.
Totally.
That costs what? And businesses trying to get new buildings completed on time and on budget. In fact, the plumbing deficit cost the U.S. economy a whopping $33 billion in 2022. That's according to one analysis. We know all of this because Bloomberg News global economy reporter Enda Curran writes about it for Bloomberg Businessweek. It's the far-reaching consequences of the U.S. plumbing problem. He joins us from Washington, D.C. And Carol and I could not get enough of this story.
Love it.
And it's also something that we talk about a lot because we know how much it costs to hire a plumber. What is it about the plumbing industry that's sort of emblematic of the worker shortage that we're facing here in the U.S.?
So there are some specific kind of stigma issues around plumbing. I mean, as you know, it's such an important function. It goes to the heart of our daily activities and our economy. Without plumbers, we don't have clean drinking water, for example. But speaking to those in the profession, the teachers and the young students who are starting out in their career there, they say that it just doesn't have the appeal of other roles because it's tough physical labor, for example. I spoke to one young plumber who gave the example of having to dig a trench in the open in the middle of summer one day, having started at 5 a.m. that morning. It's seen as dirty work. There's the perception of lying on your back, fixing someone's toilet. And of course, the hours hours can vary, but they're not seen as especially social compared to other roles. So when you throw all that into it and consider then this conditioning of younger people over the decades that they should gravitate towards the university away from the trades, the end result, speaking to those people in the industry, is that the skilled trades like plumbing just don't feature very highly on the wish list for young students these days in school. They much prefer a university education. But the pitch is you can become a plumber, get a good job, and have much less debt.
Well, how quickly can you become a plumber or an electrician? Because my understanding, and we'll sometimes have someone come into our home and it's like they've got an apprentice with them who has to do that for, I thought, a substantial period of time. But set the record straight, because is that part of the problem? That is it just taking too long to train them or allow these folks to kind of go out on their own?
Well, it's a process. It's a 5-year process that kind of rotates between the practical laboratory work and the tuition in the school, and at the same time being attached to an actual licensed plumber. So over the course of it, it is 5 years before they get their full certification. But along the way, their wages will be increasing. And as I mentioned earlier, they are not accruing the debt that you would be to have to get a life skill or trade in some other part of life. The end result, when you do come out of it, you can get a good job, well-paying, and potentially for life if you want it.
That's what I wanted to hit on here. Is we talk so much about the student loan crisis here in the U.S. And I mean, my jaw just drops when I talk to parents about the cost of college for their kids right now. I mean, we're talking upwards of $60,000 to $90,000 per year for a cost of college here in the U.S. at some schools. And you did some looking into the apprenticeship program, some schools for this stuff. How much does it end up costing total for a 5-year program?
So let me give you the example of the Plumbers and Gas Fitters Local 5 Apprenticeship School. Forgive me, I just needed to read it out to get the name right. I went to that school and they pay the tuition of the students. The money comes from both the unions and the
Hold on,
employers.
Excuse me? They pay the tuition? Yep. Say that again.
They pay the tuition for the students for the 5 years.
Okay.
And the students need only pay $1,500 each over the course of the 5 years. But they are also required to buy a pair of boots and a measuring tape. And this is what, when I speak to the teachers and the students out there, this is the great appeal for them. Like you mentioned, you've got this whole political debate going on about student debt, and you have the legacy of students trying to pay off that debt. Well, here's a walk of life where you can go in, get a good qualification, get a good skill set, that does go beyond fixing toilets, by the way, and then come out of it relatively debt-free and with a good salary.
So obviously the pre-apprenticeship courses that you looked into are just overflowing with students, right?
Well, this is where the rubber hits the road. So I cited an example of a brand new pre-apprenticeship program that has been put on by community college in Maryland to deliberately attract young people to become plumbers. It's a well-equipped brand new laboratory. They have 18 seats and they have 3 students who have enrolled. And this is what speaks to the idea of the plumber shortage, right? People just aren't necessarily being attracted to it. And again, you speak to the plumbers and the teachers, they say you've got to go into middle school upwards and condition children that A, it's good to have a skill, B, you don't have to, it's not all about university, and then C, they're making the point that schools also have to have practical classes now, like woodwork, for example, allow students to do that, and then along the way they can make up their mind whether it's university or trade.
You know what they need?
Yeah.
They just need more plumbing influencers. Okay? I'm not joking. I heard Paul Brennan laugh. This is not a joke, but this is like a thing on TikTok and Instagram and stuff.
Plumbing influencers?
Influencers for every trade. For woodworking, for plumbing, for cleaning cast iron. I mean, seriously, everything is out there.
Having said that, I mean, you think, I remember like a show like This Old House, like they were trying to recruit students because nobody wanted to do construction anymore. Nobody wants to do this. I mean, but I want to go back to Enda. Does someone really need 5 years to become a plumber? If the demand is such an issue, isn't there, I don't know, like I don't know enough about it. And I certainly want if somebody comes into my house that they do it right so that all of a sudden I don't have a flood. But does it really have to take that long? Is there any move to kind of figure out how to condense the teaching so we can get people out there?
I mean, look, that's obviously a fair question. I'm sure that teachers will be open to that debate, but I have to say I have a newfound respect for what they do. Happen to go along, I shadowed them in the classroom, watching what they're doing. You've got the technical side of it, which is the quantitative quotient, learning those blueprints, figuring out their math for the measurements, figuring out how to get the water flowing in the right direction, the right weight, and the right pressure. There's a whole technical side to it that I guess I wasn't fully aware of. And then there's the physical side to it and the the sheer the labor side to it. So it certainly would take some time before you're fully confident that you would let this person run amok in your house. I would imagine it takes a few years at least, but whether that's 4 or 5 years, I'm sure that's probably a valid point for debate, but that's where the program seems to be set at the moment.
Hey, and just in the last 30 seconds, dovetail this with your most recent reporting about just the overall worker shortage and the way that the immigration in the U.S. needs to change in order to fill these jobs.
Yeah, that's right. So these companies, and especially those in construction, say they cannot get the workers. Part of that solution, as we talked about the last time, is legal immigration. But in this case, it speaks to the idea that children at school, if they're encouraged to learn a trade instead of university, could go some way towards filling some of those skills shortages as well.
Yeah, and I'm sure there's like carry it out. Construction, electrician, like there's lots of things. And to Karan, thank you as always. Global economy reporter at Bloomberg News. They're in our D.C. bureau. His story featured in the forthcoming issue of Bloomberg Businessweek magazine, but you can read it now on the Bloomberg terminal, of course, at bloomberg.com/businessweek.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Time for a tale of two banks, one small and one that is a more than $61 billion market cap company. First up, the view from the small, family-owned, more than 100-year-old community bank, Citizens Bank of Edmond, which is based in Edmond, Oklahoma. There is one main branch, online banking, and they're working on programs to bring in the unbanked.
With more on the environment and a program that taps into her background, Jill Castilla, the president and CEO of Citizens Bank of Edmond, joined us in the studio. Jill, also a U.S. Army veteran who held various posts at the Kansas City Fed. We kick things off asking her about seeing any signs of stress.
And we finished the year with 0 past dues, 0 non-accruals, and 0 classified loans. Never in the history of our institution have we had those types of numbers.
How would you have answered that question a year ago?
I would have been concerned about not so much the lending side, but just the uncertainty when it came to deposits, because we had the regional banks, the stress that was happening there, and education to customers about what uninsured deposits were. We're right at 5% uninsured deposits.
So meaning, 95% of your deposits are insured by the FDIC.
That's exactly right. And so most banks like mine are like that. So it's an education process. The confidence and the customers expressed in us was quite high. And we were just at the front of being transparent and open and just accessible through that kind of transition.
So you said you've never seen this before?
Never.
So how do you explain it?
I mean, there's still so much money out there, and there's so much optimism, even with the difficulty of having the inflationary pressures affecting families. I mean, that's happening, with small businesses. But I think that there was just we couldn't hire, fast enough because there wasn't the labor force there. And so small businesses didn't overcorrect that optimism. And so I think it's kind of kept things in check. We're seeing some small business stress. You've got to have a good business plan and good product to be successful. Were there for a period of time, it was kind of irrational exuberance.
Help me out though, when you say there's so much money out there, meaning what? Money for lent? Like, what do you mean by that?
There's a lot of investor money still out there that's either investing in real estate or buying businesses, a lot of M&A activities that's still occurring for small businesses. And so you just still see investor optimism out in the marketplace, not really thinking about the market, but really what's happening on the ground.
Hey, tell us more about the focus of your bank. It's single branch, employee owned in Edmond, Oklahoma. Who are your customers and what are the segments that you're not just active in, but prominent in?
Yeah, so it's just your absolutely traditional community bank. If you watched It's a Wonderful Life, we're basically George Bailey.
It feels so lovely against the backdrop that we've grown into, but go ahead.
It is really interesting. So we have, as our average deposit, our median deposit is right at $12,000. So has small depositors.
Retail, this isn't business.
But small businesses and consumers.
Wow. Okay.
Very kind of equal on the deposit side. And then our lending, we do traditional mortgages as well as small business loans and commercial real estate.
On the mortgage side, with rates at roughly 7% for a mortgage right now, how have you seen it slow down locally?
Oh, it's come almost to a complete halt in some ways, but a lot of cash value buyers still out there. There's still people moving into town that still need to buy a home. But then whenever you're looking at rent availability, which has increased lately, it used to be really difficult just a year ago to get a house for rent. Now it's a little bit less expensive to do that and then more accessible.
So your mortgage business is almost completely dried up?
Oh, yes. Yeah, the mortgage business is very low.
When do you think at what rate do you think it'll come back?
Yeah, I think whenever we're in the sixes, that really helps, kind of momentum whenever you start getting into the sevens.
When you're in the sixes?
But I think it's starting to normalize. I think the expectation has been we're around historic norms right now. And so I think realtors are starting to accept that and consumers are as well.
What's the upside of being a bank like you are, right? That's kind of an anomaly, right? In a big bank kind of environment, certainly here in the New York Metro. But there's upsides and downsides to everything. What's the upside? What's the downside? Or how you think about competition, especially in the digital space, where, even someone who's got, an actual brick and mortar, if you will, that you've got to compete with the digital space as well, especially for a younger generation?
Yeah, so it's such a great question. So we've been around for 122 years, and our plan is to be here for another 100 years. And so where we are so accountable to our customer base and that accessibility. I sit in our lobby, so customers come straight into my office. But whenever we're competing in the digital space, we just launched a digital bank for the military. And so this bank, also a $350 million bank, we just received our first patent for a completely remote self-service bank. So just because you're small doesn't mean you can't be disruptively innovative.
Can you talk a little bit about that? Because you are a U.S. Army veteran, and a lot of your family, your husband served, your kids went to military academies and are serving. What are the unique needs from the military when it comes to financial services? Yeah,
so soldiers, a new soldier like I was whenever I enlisted, many of them showed up unbanked, and that's still occurring. And they still are quite susceptible to predatory lending.
Because they were so young?
Yeah, so many banks won't open independent checking accounts for 17-year-olds. They have to bring their parents in. Many come from situations in which there's not a lot of financial literacy and support around them. So it's really their first job, and maybe their first job in their family in a couple of generations. So it's really a great opportunity for us, we think, to be able to really meet someone where they are, provide financial literacy around that, and really understand this young hero coming to serve their country. How can we support them best to get them on firm financial footing?
Can't agree. We have all these people who go fight around the world for, to defend democracy, defend freedom, and yet they're often left behind in so many different aspects of our society.
Yeah, we talk so much about after they serve too, Carol.
Healthcare, financially, educationally, and then you're talking about banking. So tell us about how this platform will work, and who will you open it to everyone?
Yes, it's open to everyone. It launched in August.
In the military, anybody.
Anybody in that qualifies for a bank account can open an account with us. It's a 2-minute account opening. We're using alternative identification methods that typically aren't available in a digital bank. So if you have a tribal card, if you just have your military ID, sometimes you can't open accounts in most digital banks in that method. It also gives them an instant direct deposit form signed by me that they can text to their recruiter. So while they're sitting there, they can open their account and not have to worry about transportation. Many of these young people don't have cars. They don't have a banking relationship. They're wanting to enlist, and so then they're having to leave and go and go to the bank to do that.
As you mentioned, you're more than a century-old bank, traditional bank. How do you compete with the venture-funded startups that are going after the same demographic?
Yeah, I view them as a lot of great, healthy competition, and many of us are really great friends, and we learn from each other. And so we partner with a lot of venture-funded startups that are in this business. I mean, who we partnered with for our digital bank, that we're in that space. And so
because a lot of these are fintechs they can't necessarily call themselves banks, but they partner with banks.
They do,
for financial services. So you've partnered with some of these fintechs?
I partner and I mentor many of them. I mean, we're cultivating that space because it's crucial to the longevity of a community bank that we have strong alliances with our fintech community.
We're talking with Jill Castilla. She's Citizens Bank of Edmond president and CEO here in studio with us. Jill, as you said, for Roger is the service, right? It's a digital bank offering for military members. You said for those who qualify, I'm thinking a 17-year-old, what's required for them to qualify? Because I do wonder how many will pass that qualification, how many will not?
Yeah, it's a very low barrier to entry. So basically it's having a valid identification. And
that's it?
Yeah, and we also verify kind of where they are to make sure that it's not a fraudulent account. So
How do you make money on these accounts?
We have a motto: if we do good, we'll do well. And so the focus has been build something that is amazing, and then the financials take care of itself. I mean, that's what's great about
are you charging for these accounts?
They're free accounts. There's no fees associated with them. We do a roundup and a match. We have a really nice, healthy interest rate on savings account. And so really the only way that you make money off of this type of account is through interchange revenue for the transactions.
So when somebody swipes their card,
so benign. We reimburse all foreign ATM fees. There's no user cost associated with this.
And where are you seeing the footprint right now of people adopting the accounts?
Yes, so it's widespread. We have them overseas. We have veterans that are living overseas. They're opening accounts, even though we're targeting that entry-level service member.
Do you have more people getting these accounts, I don't want to call, what are they? They're not virtual accounts, but they're online only accounts.
Yeah.
Do you have more people who have these accounts than customers who are walking through the door of the branch?
We're opening them out at the same pace, but we have much more accounts in our physical branch than we do in this digital branch.
But eventually you'll probably have more.
Yeah, I think it probably will. It's the ease and accessibility to be able to get banked where previously going into bank is so intimidating. I remember growing up and being intimidated going into a staunchy bank, and being able to reduce those barriers. It's good for everyone.
Do you remember the first time?
I actually remember my first book, but it was interesting. It was
I do
kind
too.
of
My parents brought me to open a checking account, and I had to be with them, and it was
But you did. You had your family do it, right? And it was like
we had to sit down with somebody,
and it was your birthday money or whatever, or holiday money, and we started really early. What kind of breaks my heart is to hear you talk about these individuals who, when you talk about being, unbanked, if you will, it's often we're talking about emerging economies or something, right? And they're trying to figure it out, and often technology comes to the rescue.
Right. We're not talking about the U.S., right?
Right. We're not, and so it kind of breaks my heart that there are folks, it's not a new story and it shouldn't break my heart because I've heard it before, but that are just left behind individuals in the system.
Well, I was economically vulnerable when I enlisted, and then a family member wrote checks on my account while I was gone and took all that money, and that was 30 years ago.
Wow.
I shared that story, and a young lady came up to me and said that was me, and she was 18 years old and had just enlisted a year before and had to have her mom on her account when she opened the account, but the mom had a garnishment, so when the money posted in her bank account, it was taken. So this is a story that's gone on way too long, and so it's really, we feel like no one else is coming. They've had a chance to come and no one else is coming, so it's our job to fix it.
How many people do you have so far?
So we're right around about 1,000 that we're serving right now. And so we really a small institution, so we don't have the huge digital marketing push that other digital banks do. We're not VC funded, but we are seeing just great receptivity on an organic basis.
Community banks, a community bank, it's employee owned. We've seen so much consolidation in the last few years. I mean, in the last few decades in this space. Can you tell us that your bank will remain independent while you run it?
I would not be here if there was anywhere in the cards that we were thinking about not being independent. We feel like we have this kind of audacious thought that we'll lead the way for everyone else and show them how it's done. We want to be here another century.
Do you want to grow physical branches too?
I sold our physical branches and just to have the one, and that's why we invented this other space, is because we had demand in another geography. So now customers can walk into our bank 24/7 in this little remote electronic banking facility with their phone, deposit up to $10,000 in cash, withdraw up to $10,000 in cash, get rolled coin, deposit loose coin, and conduct their banking transactions 24/7 integrated with our core. So it's like a small business ATM.
I have seen some of the big banks start to do that also.
Well, we have the patent.
Okay. So maybe
you might ignore them a little bit.
Doing the exact same thing.
Just got about 30 seconds left here, Jill. I do think about, the importance of community banks, right? What you see versus maybe, what a big financial giant that is many miles away doesn't see.
Well, and I think we get lumped into the big regional banks when we think about all the small ones are ones that are less than the top 20, whenever there's 4,000 of us, less than $1 billion. We are here serving our communities every day. We're the ones supporting the little leagues, that we're in the grocery store aisles, accountable to our communities. So you don't need to worry about kind of what Wall Street's thoughts are on the bank, because you know what the bank is doing day in and day out. You see the loans that they're doing. You see if they're being responsible with their deposits, and you see how they're investing and building their communities.
Great stuff. Interesting. And come back and let us know how Roger's doing. It'd be interesting to see. Really fascinating. Jill Castilla, she is president and CEO of Citizens Bank of Edmond, joining us here in our Bloomberg Interactive Brokers studio.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
And now to another perspective in banking, someone whom we also caught up with after the last FOMC decision. Bill Demchak is chairman and CEO of PNC Financial Services. It is home to PNC Bank. PNC Financial has a more than $61 billion market cap.
We talked about the one-year anniversary since the collapse and the troubles of several regional banks. We're talking about Silicon Valley Bank, Signature Bank, First Republic, and why we've heard a lot of senior execs in the banking sector talk about the value of being boring.
Look, I think banking is a little bit unique at the moment because we're in this uncertain period, as a function of pending regulation the impact of interest rates and when the Fed's going to ease or not ease. So it's a little bit different. I think the economy is kind of what you read about. It feels pretty healthy. It's slowing at the margin from a rapid pace. Labor's good, and at least inside of PNC, we're largely on the same page with Chair Powell on his recent comments.
What can you tell us about your customers right now? And I ask because we had a really interesting conversation with the president and CEO of Citizens Bank of Edmond. I mean, this is a tiny bank in Oklahoma, one physical branch, and they have an online business with 1,000 customers. So, I mean, we're talking tiny. But Jill Castilla told us yesterday that she's never seen a better environment for her customers. Things are really, really good right now.
It's Jill's actually a good friend. She's not wrong. On the corporate side, there's areas of weakness, but there's a lot of areas of strength, particularly as we kind of lean into manufacturing and onshoring again. The consumer, varies by income level. We've obviously seen basic wages increase a lot, particularly at the lower level. But at the same time, we've seen the prices of their staple goods increase more, compounded through time than their wages have, even though in many instances wages have doubled. So, it varies.
Well, and we kicked off here, Bill, getting into you that 1 year, essentially, a little bit more than 1 year since Silicon Valley Bank and the collapse of it. Do you feel like we're out of that environment? And I think one thing we have learned is, right, that not every bank, not every regional is the same, and in terms of their exposure. But we're still kind of a little concerned about commercial real estate, not sure that we've gotten through that. So when it comes to concerns within some of the banking sector, do you think that we could see more trouble still, depending on their exposures?
At the margin, probably in smaller banks, most of which you will never have heard of. I think, first of all, as you know, I don't particularly like the term regional. It's not very descriptive of anything anymore, particularly in a digital age. So
I'm not going to call you a super regional, which people call you sometimes.
No, I don't know we're a national bank.
I know you are.
That campaign in a second, but practically, and you see the same numbers I do, as banks get smaller, they tend to have a higher concentration of real estate. Their concentration of real estate tends to be more fixed rate, medium term in length, and B and C properties, so permanent financing on older B and C properties, which is kind of the area that's going to get hit the most, and a higher rate environment with, increased office vacancies. But it's not a systemic issue, certainly for the banking industry, not for any of the names you will otherwise know, and we'll make our way through it.
Well, let's talk more broadly just about real estate, and talk to us a little bit about your own exposure to real estate and commercial real estate. How can you characterize that for us?
Look, it's a small percentage of our total loans, not a big percentage of our capital. We have plus or minus $8.5 billion, I guess, in total, what you would define as office, and that is where all the spotlight is. Starting to shine on multifamily, but we're not seeing stress in multifamily at the moment, notwithstanding, news that you might see out of New York and affordable and other places. Generic multifamily is doing just fine. But inside of office, say we have that $8.5 billion, there's about $4.5 billion to $5 billion that is multi-tenant. And that's where the problem is. And we expect problems there, and we're reserved to quite a high level against it. And thus far as we've cycled through, these projects that go non-performing, we've actually been conservative in what we've been reserving. So we feel okay about it. We're heavily reserved today. It's going to, most of our stuff comes due over the next year. So, it's kind of project based. They come online. So we're gonna know the answer to this pretty quickly, I suspect.
Interesting. Hey, listen, we also said that boring is something that you guys are tapping into. We've got a great chart that we can share with those who are watching right now that our producer Elizabeth is going to share out with everybody. But it talks about bank management, not just your own, but others using boring on calls this year, quarterly update calls and earnings calls. It is up a lot. Boring, not a bad thing. And you guys have an advertising campaign that you are stressing that.
No, we do. I mean, I'll make a couple of points. I think if you look back in history, I've talked about our bank and banking in general is kind of 3 yards in a cloud of dust, and you grow, with GDP, and if you're good at it, you can outpace that. But we are, by our very nature as an industry, when you see outliers to that, there tends to be something going on underneath that. And when we think about, we use the word boring. I don't necessarily like to think of myself as a boring person, but
I didn't mean
banking ought to be, no, I get it, but boring, banking shouldn't be drama for our clients. It ought to be predictable, consistent, stuff works, they know their money's safe, they don't have to read about us in the headlines.
Right.
And that's who we are. That's how we define ourselves. We
right.
To the core of this company,
Bill.
To the very best of our ability, we try to do right by all of our constituents every day. And when we screw it up, we fix it.
Bill, we're going to leave it on that note, but hope we can get you back here real soon. Bill Demchak, he's CEO at PNC Bank, joining us from Pittsburgh.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We are living in an era of contrasts, financially, politically, socially, globally. For example, here in the U.S., feelings of financial insecurity among Americans have reached their highest point in at least a decade. That's according to Northwestern Mutual's annual Planning and Progress Survey. At the same time, household wealth in the U.S. increased to a record last year as investors reap the benefits of a surging stock market and higher home values.
Our next guest looks at these contrasts and at the crises that the world has dealt with in the recent past. From the great financial crisis to the pandemic and more. She even has a take on Boeing, which was in the news a lot this past week as it announced a major overhaul in the C-suite, including CEO Dave Calhoun stepping down by the end of the year.
We're talking about journalist and author Grace Blakely, who is the author of several books, including one on the great financial crisis, another on the pandemic. Her new book is Vulture Capitalism, Corporate Crimes, Backdoor Bailouts, and the Death of Freedom. She, joining us from the UK, and began our conversation talking about crisis and capitalism.
Yeah, thank you so much for having me on the show. So really what I'm looking at in the book, as you say, often I use the lens of crises to show, really to expose the way that capitalism really works. Because I think that we have this idea in our heads of the economic system in which we live as kind of meaning free markets and democracy, right? That we live in these kind of free market economies. And if there are problems within the market, then it's up to the government to kind of put things right. And what I show in the book is that actually capitalism most of the time doesn't mean free markets. It means concentrated monopolistic power.
You don't think we're free at all, do you?
I really don't, no. And part of the problem is that governments don't really act as a check on corporate power. Most of the time, they reinforce the power of big businesses. The big example at the moment is Boeing. So Boeing's obviously been through this horrendous time, loads of corporate scandals, massive cover-ups over the issues that have been besetting its planes. And it's one of the biggest recipients of corporate welfare in the US. It gets tax subsidies, it gets tax breaks. And it's got loads and loads of government contracts. It got a big bailout during the pandemic,
right,
even after the 737 MAX disasters.
I will point out, Grace, that Airbus, the European rival to Boeing, it is a duopoly, I think it's fair to say, also does get some of that same favorable treatment. It's been the subject of WTO issues. Would you say that Airbus has the same issue that Boeing does? Would you characterize it the same way? Some of the same
issues, definitely. Yeah, totally. So, I mean, I look at this actually, how these two aerospace manufacturers have become so deeply interwoven with the US state on the one hand and the European Union and various states within that on the other hand. And Airbus has also been embroiled in corruption scandals. So, these two giant firms, as you say, in this duopolistic market structure, with Boeing obviously having dealt with some serious safety failings, Airbus dealing with some corruption scandals. It kind of shows that this line between states and markets isn't really as clear as we'd like to think.
It's interesting, where we are often talking about our data and data privacy and control of our own data when it comes to the social media world, whether it's TikTok, whether it's other social media media companies, and how our own data, which is very valuable and has made some very large market cap companies out there and made a lot of companies, if you will, very wealthy in the process. It's interesting, though, that this idea of, kind of taking back our economy is something that you are digging into. I mean, do you not like capitalism at all? Do you think it's all bad?
Well, to be clear to your listeners, I am a socialist, so I'll put that.
Get that out of the way early.
I know it's kind of a bit more of a dirty word in the US than it is in the UK. But I think even if you're not a socialist or even a progressive, my analysis is still relevant because it's something that, libertarians, for example, have been saying in the US for a very long time. It's that we don't have real capitalism. We have crony capitalism, right? It's a kind of perversion of a free market system. And what I show in the book, using loads of historical examples, is actually this has kind of always been the case. So it's always been the case that big businesses have worked with and through governments, basically to get their way, all the way back.
Think of the robber barons, right? Or going back even further.
Well, Grace, I think critics might say, okay, I understand the criticisms that you have of capitalism, but show me a better system out there. Can you show us a better system?
Yeah, so the third part of my book is really dedicated to thinking about alternatives. And I actually start at the grassroots and community level. Because, I mean, if you think about it logically, there's this fusion of public and private power in the economy. You can't just rely on the state to do things to kind of contain what's going on in the economy. So what is the alternative? You have to build people power. You have to build power from the ground up. So that means making sure that workers are able to organize within their organizations, but also have a voice within how those organizations are run. When you have more democratic processes within corporations, like, workers on boards in Germany, for example, they actually perform a lot better and the whole system is fairer. But I also look at a lot of examples of communities organizing in their local area to build a kind of fairer local economy. So we've got this idea of community wealth building. There are examples of this in the UK and in the US, and really downtrodden places like Detroit, for example, where local groups have come together and they've built cooperatives, they've built community energy companies, they built community banks, and they've started to say, how can we make our economy work for us instead of the big businesses and actually politicians?
I got to say, Grace, Tim and I are having conversations in the break about your book and your thinking. You said, I'm a socialist. You are a socialist. I'm not. And we're talking a lot about capitalism. And in your book, early on in the introduction, you talk specifically about capitalism and this balance between markets and planning, and that the planning part of the equation is really important, right? How it's being executed, whose interests it is serving. And I mean, is this where kind of capitalism has gotten into trouble? There are companies out there that are great for their workers, provide pensions still, great healthcare, great this, great that. Where did the disconnect happen in your view, that things kind of was more in the favor maybe of owners or shareholders or senior executive versus a lot of the folks that are actually on the line doing a lot of the work?
Well, we know when this big shift happened because we saw it in the inequality statistics, in the wealth that was being accrued at the top of the economy and the size of the financial sector, in things like share buybacks and dividends. All of these things started booming in the 1980s when you had this big deregulation of the economy, or should I say re-regulation of the economy. I think there's this sense that the changes that were brought in the 1980s, so things like privatization, changing to regulation, tax cuts, etc. There's this idea that was about shrinking the state and boosting the power of the market. And in fact, what you saw was not the state becoming smaller. It was just the state becoming smaller for some people, generally workers, and very, very big for the kind of the corporate class and the financial class as well. And the most obvious manifestation of this was, of course, the massive bailouts after the banking crisis. But you saw this all throughout the pandemic as well. I did some research just looking into the astonishing levels of actually corruption. I don't think there's another word for it that characterized some of the stimulus packages in the US and also in other parts of the world, where you had, government funding going to firms that were owned by Congress people, and then those firms donating tons of money to the re-election campaigns of those Congress people. So, this idea that the changes that we had that led to rising inequality and this big shift in power in the economy, that was all legitimate because it was about promoting free markets.
To be sure, and to be fair, though, right, during the pandemic, different from many would argue what happened in the great financial crisis, where the money went straight to companies versus Main Street, right? We know a lot of people losing homes and so on and so forth weren't getting the assistance that the banks were getting and other companies were getting, if you will. During the pandemic, money did go, though, to Main Street. We still talk about it, that support has stayed with a lot of individuals and households for years coming off the pandemic. So to be fair, individuals also got it as well.
Well, yes, but a lot of that just went straight through to paying back debt, so it ended up with the banks, or paying rent, so it ended up with landlords. And actually, there's this really interesting case study of a couple of big corporate landlords in the US that received tons of government funding throughout the pandemic and were told to kind of enforce this evictions moratorium that was supposed to be implemented. And there's this fascinating example of this corporate landlord that I look at in the book that basically used the uncertainty around the pandemic to scare people out of rental accommodation, basically telling their tenants that the evictions moratorium wasn't being enforced and that they would be kicked out if they didn't leave voluntarily, at the same time as receiving government funding, which I think was really just horrifying.
Grace, it's so interesting to hear you speak, and also to see in the book. I think politically, at least here in the U.S., you wouldn't necessarily be surprised to hear former President Trump bring up some of these points at rallies. And indeed, this idea of populism that has caught on here in the United States over the last 8 years or so in response to what we saw after the great financial crisis. Talk a little bit about the Venn diagram and the sort of the strange bedfellows, one could argue, with socialism and the way that you describe it, and then also with populism.
This is kind of why I wrote the book, because people like Donald Trump succeed when the average person feels really, really powerless. And you see this in the UK as well, extremist politicians doing well. And when you ask people why they vote for these people, it's basically them saying, I don't have any control over my life. The system is rigged. So they feel powerless, and then they project their sense of political agency onto these strong figures that say, I'm going to burn the whole system down. Most of the time, those strong figures, those anti-establishment figures, come very much from within the establishment. And, people like Trump says, I'm going to drain the swamp, and then goes in and delivers this massive package of tax cuts that massively benefits big corporations and big businesses, and does very little, actually, for the average American. But this anger that bubbles up beneath the surface of our very unequal economies ends up feeding into the rise of the far right and the rise of a kind of extremist populist politicians if we aren't able to identify it and provide an explanation that isn't just conspiracy theories. And this is such a big thing now post-pandemic. It's like conspiracy theories about who's running the world economy and like the World Economic Forum and the Great Reset and things.
Oh yeah.
And I think all of that feeds into this sense of like, we're powerless. We know that lots of stuff is going on up there in the clouds, but we don't feel that we can control it.
Well, and I feel like it's always like follow the money. Like whenever there's money involved, it feels like that's how the gaps in many ways can often widen. Grace, we unfortunately only have about a minute left here. So what's the way forward in your view? If we don't want to become socialists and continue to operate under a capitalistic society, what's the way forward in your view? And got about a minute left here.
So I think the key thing here is accountability. Capitalism is supposed to have markets to enforce accountability, to make sure that corporations can't get too big, that the rich can't get too rich, because there are all these checks and balances. But we don't really have those right now. So the question is, how do we enforce accountability? And that has to come through real democracy. Democracy in our corporations, democracy in our communities, democracy in our governments, everywhere throughout society. And that's really what I want to see.
But if they don't want it, how do you get it? Those are the folks in power. As I remember coming off of the pandemic and George Floyd, about people who said, I don't have a seat at the table to help change things. And these were Black individuals. People who don't have a seat at the table, how do you change things? Again, just about 30 seconds. Forgive me.
You got to make trouble. They're not going to give power away. You have to build power from the ground up. Whether you're a unionist and you want a seat at the table, you've got to organize in your workplace. If in your community you're being exploited or oppressed, again, we've got to organize. We've got to try and build alternative structures. And again, not just protest, but really seeing ways that communities can come together and say, we're going to change the way our economy works.
I feel like another relevant conversation for our times. Grace, stop by again. I'd love to continue with you guys, with you specifically, rather, this conversation. Grace Blakely, her new book, Vulture Capitalism, Corporate Crimes, Backdoor Bailouts, and the Death of Freedom.
Really interesting stuff.
Right?
Yeah.
Are you ready to be a socialist?
I'm ready to talk more to Grace.
I'm ready to talk more to Grace, too. All right, this is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including how the king of sitcoms went from writing a TV show about young scientists to helping students become scientists. We'll check in with TV writer, producer, and director Chuck Lorre. This was fun.
This was a lot of fun. Plus, the sports executive turned theme park and experiential CEO on the theme park business and playing to consumers.
And a great story from his daughter about when they had to move, but you'll just have to wait and listen. All right, in Pursuits, it's the opposite of quiet luxury, but with this much speed, you may not care. What's it like to drive the $345,000 McLaren 750S Spider, or hang out at a Saudi Arabian oasis and archaeological site turned master plan luxury tourism outpost? Our Hannah Elliott did both. She stops by in just a bit.
Hey, first up this hour, Carol, have you been to Legoland ever?
Nope.
Okay, what about the London Eye?
No.
It's not too late.
Yeah, no.
Well, these are just a couple of the entertainment destinations owned by Merlin Entertainments, formerly a publicly traded company, but now with owners including Blackstone and the Canadian Pension Plan Investment Board.
Yeah, they've got their hands on a lot of things and a great read on what we are all up to. It is a British entertainment company, parks and attractions in 23 countries around the world, serving more than 60 million guests per year. Scott O'Neill is the CEO at Merlin Entertainments. He was also previously president of Madison Square Garden Sports, owner of the Knicks, Rangers, Liberty, and more. Also, the former CEO of Harris Blitzer Sports and Entertainments, which includes the Philadelphia 76ers, New Jersey Devils, and more. He's seen a lot in the world of sports. We began by asking about how it was to relocate to the UK.
You know, I'm pretty happy. I moved to the UK. It's been a big adjustment.
Do you like that?
I do. I didn't anticipate how challenging the move would be. I've grown up in this little bubble between New York, Philly, Connecticut, New Jersey. And
what was challenging? The weather or just different?
I just think, well, I have my youngest is 17 years old. So taking a 17-year-old out, I just have to use one quick story.
Yeah.
Is, we're having that heart-to-heart, that father-daughter connect conversation. And she holds up her finger and points in my chest and says, Dad, let me get this straight. Your career is more important than my happiness. And she turns and just walks out of the room. And I was like, but I love you. I mean, I love you, honey. Bye, Eliza. So that transition was harder than we thought. But she's happy now.
She's
thriving.
That's what
She's in London with you?
She's in London with me.
Okay.
She won an international basketball championship, gold medal.
Score.
What?
Congratulations.
So she's doing great. She's thriving. My wife's happy. So yes, so life's good.
Dad.
Can you imagine?
She's good. I can tell you.
Right in my chest. Boom, boom.
She'll never forgive you, but that's okay.
No.
Yeah, that's okay. Your business is all about leisure and discretionary spending. And you've got a great view around the world because you're in, more than 20 countries at this point.
23 countries.
So just give us an idea of how things are going when it comes to that
spending and doing stuff.
Yeah, well, we're pretty fortunate. For those of us who had children in COVID, it was a little close when we couldn't leave the house. And when COVID ended, we got on planes as quickly as we could. But the one thing we were searching for was connection and meaning and memories. And we moved away from the economy of things to the economy of experiences. And so we have a lot of tailwinds. We go from Malaysia, Korea, Japan, China, all the way to the US and everything in between.
Yeah.
And so we get to see quite a bit. So whenever people are like, how's business? I'm like, in which part of the world?
Where is it bad?
Yeah.
China is tougher than we anticipated. We anticipated even this year a recovery a little bit quicker than it's come.
So people are doing it, or is it just at a fraction of what it was?
It's just slower.
Yeah.
Yeah, domestic tourism slower. Their international tourism coming out of China is a bit more than we thought. U.S. is still fine. U.S. is great. I mean, the U.S. consumer, we're wonderful people. You know,
we spend money?
We do love to spend money, and we love experiences and memories and fun things.
Does that mean we're at pre-pandemic for you guys?
We're over pre-pandemic.
Over pre-pandemic
both
levels.
In terms of revenue and volume. And the UK is a little schizophrenic. Very good for internationals last year. This year it's a little slower. Domestics is slow, and Europe's slow. Now remember, we had bizarre weather last year. Okay,
Yeah.
so most of our peers, Disney and Universal, and I know most people listening maybe haven't heard of Merlin Entertainments before, but we are the number 2 theme parks and attractions business in the world.
Does that frustrate you that, like, if you think about so many of those names, Legoland, like we just went through them, I mean, they're well known.
Our
if you have
brands
kids,
are great.
But that the recognition...
It's coming.
Okay.
It is coming, like a freight train.
But does it even matter if these brands aren't necessarily connected to one another, that people know that Madame Tussauds is owned by the same folks who own Legoland?
I think it does. I think when you talk about, not to be too technical, but we are at Bloomberg, when you talk about EBITDA meeting multiple, when you think about how do you grow your multiple, one of the things that I think matters to Disney is their brand. And I think one of the things that matters to Universal are the license partners, the brand IP partners. And you look at ours.
Agreed.
You take, personally, I'd take Legoland and Peppa and Madame Tussauds, and I'd put them up against there. So we're dragging behind them. Now we're way ahead of the U.S. regional theme parks like the Six Flags and the SeaWorlds and the Cedar Fairs in terms of multiple. But I think we have a journey ahead of us to map the brand and the experience to where we are.
Tussauds, the movie or something? Like how do you know? No, I'm serious.
There could be some content around it.
Right?
So we have a lot of different brands. And so we have to take a portfolio approach for sure. But yeah, I did.
I wasn't being facetious.
I know.
We talked to the Mattel CEO a lot.
We talk about the Barbie movie.
He's amazing.
Yeah,
he's amazing, amazing executive for sure.
But just like how you kind of, capitalize on all of that.
Yeah, well, there are a whole host of things. I'm following a founder, Sir Nick Varney. He's knighted. And I thought to myself, could that be me someday?
So like when your daughter comes at you, you'll say, yes, I'm taking the job, but it's Sir. It's Sir, honey.
I somehow don't think that's going to happen.
Maybe she'll have to stay at school and take a test during the ceremony. That could happen. Let's not get ahead of ourselves, though.
So following a founder, there's so many wonderful things, and I come from a family of founders, and my brothers and sisters have all founded companies. I'm the only sellout out of the 5 of us. And the magic, the stuff, you can't see this on the radio, but the feel of the business that you have as a founder.
You're on streaming, actually. You're on YouTube and streaming.
Bam.
Thank you.
So there's so many wonderful things, and they feel the business so well, and a lot of stuff becomes intuitive, and that's hard. And they have like this father or motherly like figure, like a larger than life figure. And so to come in after that, there are a whole host of challenges culturally, et cetera, with leadership. But there's also usually these gaping holes of opportunity. And because the founders have such rhythm and intuitiveness in the business, you have things that I think can really underpin future success, like digitizing the business, like driving data, like dynamic pricing, like the stuff that I've my whole life have made a business of, come into a new business, and you think, my eyes are as big as saucers, and I'm thinking, okay, there's enough opportunity.
When you think about the different types of products that you offer, the different attractions that you have, what's growing and what's struggling right now? Like, where's the opportunity for growth?
Yeah. Well, in Legoland, that's about 40% of our business. Legoland Resorts, there are 10 of them, 3 in the U.S., Korea, Japan, Malaysia, Dubai, Germany, Denmark, London, etc. We're building a one in Shanghai in China as well. It's a really good business, and we have to invest in making it more premium. It's like, oh man,
sorry, but go ahead.
That brand is wonderful.
Just the recognition.
They know, and Niels, who's the CEO there, just understands the brand and how to grow it, and their partnerships are smart, and they're wonderful people, and they know how to do deals and drive deals, and they're one of our largest investors. And so that's an unbelievable opportunity, but we have to continue to invest. How do you make that more premium? That's what we're finding is, like, there is a flight to quality, premium's gonna matter. Our resort theme parks business, a lot more complicated. It's kind of like if you can imagine a Six Flags dropped in Europe, that's what we have in Europe. And I'm of the school of bigger is better. So mega resorts will matter and regional ones will really struggle. And so we're on the effort of that. And then where I think there's the max growth from us, we had over 20% growth in this segment. We call it Gateway. And London is the best example. We have 2 what we call must see, must do. We call them anchor attractions. The London Eye, by the way, and Madame Tussauds, the original. And then we have 3 other attractions. 1 out of every 4 tourists into London come to one of our attractions. And 40% of them come to at least 2. So that's what I call like cluster penetration. And building those in the 10 most important tourist cities in the world is where I think our growth is going to come from.
Just got a minute left, man. I wish we had 10 more minutes left.
Me too.
I got to ask you, though, with your sports background, do you miss it? Being actively involved in like running a team and so on and so forth?
There are elements I love and miss. It's mostly about the people.
Yeah.
In terms of when you hit a certain level at those jobs, it becomes a different type of job. And if you compare that type of job to this one, it's not even close. I mean, I've got people, purpose, and scale, which is what I'm looking for. I'm like learning every day. I was in that business for so long, I knew it. And I wanted to stretch a bit.
30 seconds left. Are you going to go back to your current job? Is there stuff to add to the portfolio?
Oh, yes.
So
yes,
acquisitions will be coming?
Yes. Well, we just bought the Orlando Eye.
Yeah.
In Icon Park. So if you're down in Orlando, swing by. It's a great respite from the difficulty sometimes of grinding through a resort. We have a Legoland resort down there as well. But yes, more to come. And that's going to be an anchor for our Orlando cluster.
Good to know. Come back soon.
Come see me at my resorts or attractions.
Bring that daughter.
I will bring her. She will actually love it, but it might be a longer show. Thanks, guys.
Scott O'Neill, thank you so much. Chief Executive Officer of Merlin Entertainment, joining us right here in our Bloomberg Interactive Brokers studio.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Was in a hot, dense state that nearly 14 billion years ago expansion started. Wait, the earth began to cool, the autotrophs began to drool, Neanderthals developed tools, we built a wall. We built the pyramids, math, science, history, unraveling the mystery that all started with a big bang.
All right, everybody, you know it well. It aired for 12 seasons, September of 2007 to May of 2019. We're talking to him about The Big Bang Theory.
Yeah, well, he's the co-creator of the hit television comedy, The Big Bang Theory. It's about young scientists in Southern California, as if I needed to tell any of you
The world
that.
knows.
And now he wants to help young scientists in Southern California, even more than he had earlier.
Yeah, he does. Through his family foundation, Chuck Lorre, the TV writer, director, producer, is pledging $24.5 million to the University of California, Los Angeles to help more low-income students study science and technology. This adds to a program he began back in 2015, and this donation will double the number of undergraduate scholarship recipients with financial needs to 80 each year. Tim, this is according to UCLA.
Well, Janet Lauren is Bloomberg News higher education finance reporter. She earlier this month wrote about Lorre's latest donation. She's with us here in the Bloomberg Interactive Brokers studio. Also joining us is Chuck Lorre, who not only co-created The Big Bang Theory, but also created or co-created and produced Grace Under Fire, Sybil, Dharma and Greg, 2.5 Men, just to name a few. Chuck joins us from Los Angeles. Chuck, I do want to start with you because you've done a lot of philanthropy. You've supported STEM education in public schools before this latest donation. Give us your thinking behind the importance of STEM, especially when it comes to a world where, we're talking about AI potentially doing a lot of the work for us.
Well, when this all began, AI was not part of the conversation. So I can't really speak to how that changes things. But my thinking early on was very simple. We had come to understand from various news reports that children here and in England, because they were watching The Big Bang Theory, were showing a spike of interest in STEM-related fields at high school and college levels. And that was remarkable because that certainly wasn't the original goal for The Big Bang Theory, to change the trajectory of a young person's life. But it was happening.
So I have to admit, as Chuck and I talked before, my family and I are huge fans of Young Sheldon.
Me too.
I had not watched The Big Bang Theory. We actually was introduced to the characters from Young Sheldon. So I have only maybe watched one episode of The Big Bang Theory. So all this is new to me. But I do know a lot about college financing. And one thing Chuck had said to me when we spoke earlier about the lack of finances is something he understood extremely well because he did not finish college and carried around student loans of $2,000 for 15 years. So he understands.
Well, after 15 years, that 2,000 was about 8 or 9.
Wow.
Yes, that's the principle of accrued interest. But that's a good detail that a lot of people out there thinking about college, they don't think about. And what I found remarkable about this program is not only does it fund college, but it gives mentorship, which is something that is hard to get through college without. Could you talk a little bit about why that it was important, and why is it important for you to see kids graduate college in a reasonable amount of time, such as 4 years, and how difficult that can be?
Well, one of the original goals that I had, for better or worse, was to keep things local, so that I could participate. And local for us here in Los Angeles was UCLA, and that was absolutely aided by the fact that our science consultant on The Big Bang Theory, Dr. David Salzberg, was a professor of physics at UCLA. And so we already had entree to the university through David. And wanting to participate and give back, it made sense to do so by focusing on young people who were pursuing or wanted to pursue a STEM field at UCLA, and also because it was local, because it was UCLA, because of David, the mentorship process was also part of this. We weren't just handing out money and saying good luck. For a lot of the kids, they were the first generation in their families to get a college education. And so they're being thrown onto a speeding train, right out of the gate. Mentorship's important.
Now, the information about the scholarship says there's opportunities for graduate school funding. We all know how expensive medical school could be. Can you talk about, was that important to you to continue students on this trajectory?
Not initially. This thing grew over a period of almost 10 years now. And when we realized that the success rate we were having with the kids going through undergraduate programs was phenomenal. And that's when we decided to expand the program into graduate school. And again, we were initially trying to keep the graduate school in the California system, so that we could again stay close to it and participate.
Well, and I am curious too, Chuck. You guys really worked hard to get the science right on the show, right? I mean, that was obviously a priority. David did. Well, talk to us about being in that environment for you, and maybe how that also shaped your thinking about where you wanted to commit money towards to help others, pursue potentially, degrees in the STEM world.
It begins with the show. The show is about a group of somewhat alienated, disenfranchised geniuses, and struggling to make their way in the world, but clinging to one another as a community. Basically, almost a family unit in the way they treated one another, both good and bad. And so it made sense from the beginning that we focus on STEM, and for a couple of very practical reasons. One is the likelihood that you graduate in one of these fields, you can get employed. Same can't be said with a BA in the humanities or communication. I think I lost you guys. Did I lose you guys?
No. We're just all listening. Thinking about our liberal arts degrees, Chuck.
Exactly.
Yeah, I'm sorry to disappoint you. But those degrees don't necessarily create a. I'm losing this thing here. Hang on.
No, we can hear you. Don't worry about it. Yeah,
we got you. We see you and hear you.
Yeah, we got you. Don't worry. Hey, go ahead.
Oh, there it is. Go ahead. So, very practically, I wanted the program to also, help young people who are going through, the journey of education to end with employability.
Yeah.
And that may have been a little bit short-sighted, but it seemed like. Wouldn't it be great to graduate without debt and have a job waiting for you?
Yeah, right.
Yes and yes.
Yes and yes, right. What did you? We have about a minute and a half, and then we're going to take a break and then come back and do more. But what did you study?
Drugs.
No. I'm not sure I have a follow-up. No, what did you really academically study?
I may have had it's a dim memory. I was talking about a long time ago. There was also rock and roll and girls. But it was, I think I might have been a political science major. I don't know if I ever mentioned it to anybody, but yeah.
No.
Also a degree that, also, as they used to say, that degree and a token could get you a ride on the subway.
A couple things we want to get to, but I do want to ask you about, it really stung me what you said, and Jana put in her story where she wrote about your donation to UCLA, that you carried a student loan of about $2,000 for 15 years, and you said it grew to $8,000. The cost of education and this idea of, kids coming out of school and not having any debt, that's increasingly becoming a thing of the way past. I don't know. Any thoughts about it as you try to help others who are pursuing education in STEM fields, and just thinking about kind of a younger generation, how we do it better, because it just feels like it's getting out of control and not getting better?
I don't have an answer to that. I just know that when state of New York caught up with me, they did catch up with me. I was very young and naive, and I don't think I understood my Social Security number was a target. But, I spent probably 8 or 9 years sending the state of New York $50 a month. And that's how I got out from under it. But I don't have a solution for this situation other than what we're doing, which is, especially, seeking out kids that are not only exceptionally talented in their scholastic efforts, but high financial need backgrounds, underrepresented kids, and where the money can be put to good use in allowing them to get that STEM education and walk out of UCLA with no debt is. That seems like a goal worth pursuing.
Major gift, yeah, absolutely.
Hey, Chuck, I want to take a step back and just ask you about your broader philanthropy, because this is just one part of it. The Big Bang Theory, UCLA Scholars, you've got the Venice Family Clinic, Chuck Lorre, Rose Avenue Health and Wellness Center. You're working on some stuff when it comes to food banks and other healthcare related causes, a trust for public land as well, and the greening of schoolyards. Just give us your philosophy when it comes to this type of work, this type of philanthropy. Like, where do you see the biggest needs?
Well, it began very personally for me. I was very ill when I was a young man, desperately ill. I did not know about free clinics. I did not know where to go. I certainly had no insurance, medical insurance, and it was a very frightening several years. And I was very fortunate that I managed to recover, but that stays with you. Mm-hmm. If you can't afford to see a doctor and you need a doctor, that's a fear that I don't wish on anyone. And so the philanthropy efforts began back in the 90s for me with the Venice Family Clinic, which I wish I'd actually known about when I was in my early 20s, but the idea that you could see a doctor without having any money in your pocket, I thought was something I wanted to participate in. So I've been involved with the Venice Family Clinic for, 25, 26 years. And that's expanded to other healthcare opportunities. And so that began, and then the STEM efforts, as I said before, began really by accident when we found out that inexplicably or explicably, the Big Bang Theory was encouraging young people to pursue STEM research, STEM fields. So the thought was really quite simple. Maybe we can help.
Yeah.
I mean, the original goal in making that show was to make people laugh. It was not to change the trajectory of a young man or young woman's life. But it was doing that. So as long as it was doing that, let's participate. And that's how the scholarship started.
Well, young Sheldon has really made us laugh. And
by the way, I absolutely love that you're watching Young Sheldon and you haven't watched The Big Bang Theory.
It's amazing. It's like fantastic. It's like a gate, but it could be a gateway, Janet, into
it's a gateway.
The original show that it's spun off from.
But he's a great character, and so is Dr. Sturgis. I love Dr. Sturgis.
Oh, Wally Shawn. Yeah, we've been so blessed with some of the casting, Ed Begley and Wally Shawn. It's been a terrific experience.
And the university president, that depiction seems entirely realistic to me. Well, how did you decide to pivot into Young Sheldon? And he finished college in 3 years, and the idea of going to East Texas Tech, and how did that all come about? Because it is a sort of a realistic path for a young genius like that.
Well, the backstory of Sheldon on The Big Bang Theory was that he graduated college at 14 or 13 or 14, I forget exactly, and then went to Caltech to do postgraduate work. So we had already laid in, the backstory for Sheldon's journey, graduating high school at the age of 11, and in an East Texas town where they simply did not have the wherewithal to deal with a genius of that size. And East Texas Tech we invented in order to keep him, to keep him local so we can do the show, and for have him ripping through that university as well on his way to Caltech, and ultimately, as we did, if you've watched The Big Bang Theory, he does win a Nobel Prize in the final episode of the series.
We definitely get it. We're going to work, Chuck, on Janet, because she's got to, if she likes Young Sheldon, she's going to love The Big Bang Theory. She's got it it's like they go together.
It's a wholly different thing.
It is different.
And to see that the absolute genius of that cast, led by Jim Parsons playing Sheldon at a later age, we had 12 years of absolute fun making that show.
Just got a minute left. Do you have a favorite moment in time, considering all that you've worked on and created or co-created or what have you? Just got about 45 seconds left here.
Wow, that's a macro question.
I know, sorry. I'm a macro kind of gal.
It's kind of hard to pull a favorite moment. There certainly have been moments that have stuck with me. One of the, I'm not, rather than specifically trying to answer that question, what I've loved about The Big Bang Theory, and I guess we're talking mostly about Young Sheldon, is, and I think why it was attractive to young people was if you felt disenfranchised, if you felt you were on the outside looking in, which a lot of people do, and you don't have to be a Mensa participant or a genius to feel that way. The show represented community. It represented like-minded souls helping one another. So maybe that's what was attractive to kids watching.
I think that's a great way to finish up. Listen, thank you, and it's a great thought. Thank you so much. So appreciate it. Be well. Chuck Lorre, TV writer, director, producer, co-creator of The Big Bang Theory, and of course our Janet Lauren here. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
All right, everybody, time, Tim, to strap in because we are going for quite a ride, figuratively, and we're going to kind of live vicariously through Bloomberg auto columnist Hannah Elliott.
We always do. She gets to do the coolest stuff.
I want to be Hannah when I come back in another lifetime. All right, she drove the 345,000 McLaren 750S Spider for a day in
That's
the desert
$345,000,
outside Vegas.
right?
Yeah, 345. Okay. Did I say it right?
I mean, it's not like it matters to us, but
it's almost $500,000.
Okay. That's before tax, by the way.
You know what else she did?
She stopped by the resort in the remote Saudi Arabian desert where burqas and bikinis mingled. And then there is, of course, the influential YouTuber known as Supercar Blondie, who's out now to sell you a car. It's a hypercar, that is.
Who also looks a lot like Hannah, but we'll get into that in just a moment, too. It's all in this week's Pursuits. Editor of Pursuits, Chris Rouser, is here in studio, along with Bloomberg auto columnist Hannah Elliott, joining us from L.A. Hannah, welcome. So good to have you here with Chris. Chris, first of all, we were trying to figure out where to start because they're all really cool stories.
Yeah, very interesting.
Did you know about Supercar Blondie? I always thought that was Hannah, to be quite honest with you.
Hannah is a blondie who doesn't just focus on supercars. She focuses on all kinds of cars.
So true.
But I know about Supercar Blondie because we cover the same kind of stuff, and Hannah knows her. But she is a very, very influential YouTuber who has a huge following, gets up to 2 billion views on her content a month, and she basically test drives and talks about and goes in with celebrities to experience supercars, so very, very high-end cars, these ones that are in the 200,000 millions of dollars. And she's just very influential in that field.
So, Hannah, come on in here and give us an idea of making the transition now, Supercar Blondie, that is, from a YouTuber to somebody who actually wants to sell you a very expensive car.
Yeah, I think that's actually the crux of the story. It's the big question and the big unknown, which is, can somebody who has such an enormous social media platform actually translate that into selling? We know that she can get a lot of viewers, a lot of people love her, and Alex Hershey is her name, and she's an Australian, is a very smart, very hardworking person. So no one's doubting that. The question is, will some among those 2 billion monthly viewers want to buy a $2 million Lamborghini that she's going to sell? That remains to be seen. If you ask Alex, she says absolutely. It's not that they need to reach all of the world's billionaires all at once to try to sell them a car, but she says with that kind of platform and footprint and access, she can find the right people.
So she's launching this auction site. What is it going to be called, and how's it going to work?
So the auction site is called XBS Cars, and it's an online auction site that will kind of run like Bring a Trailer. It's very different because it sells only high-end cars, but in terms of live auctions that run for a week or 2 weeks, and in terms of having people who can comment and everyone can watch the auction taking place, it's very similar.
What's Bring a Trailer? I'm not familiar with that, so just give us a little bit of a reference.
John doesn't spend a ton of time on Bring a Trailer. Like
no. He has one car and that's it.
Okay. My dad spends a ton of time on Bring a Trailer.
So yes, Bring a Trailer, we have to say, Bring a Trailer is really the model that everybody's chasing. It was the first sort of breakout auction platform to prove that people will buy cars online that they have not even seen in real life, let alone driven. Bring a Trailer was started by Randy Nonnenberg in 2007, and it started out slowly, but last year it reported $1.4 billion in sales. So it's doing great, and it really has been sort of the model that has proven that this sort of thing can be done. Now, no one has done it like SBX Cars and tried to do it with only really expensive, really rare hypercars. But yeah, that's what Supercar Blondie is going to attempt.
I love that it comes down to basically supply-demand. It's as simple as that.
Well, she knows where those cars are. That's like a huge part of like the art auction business. Like she knows where all those cars are in the world. And eventually, I think for this business to work, she needs to start doing private sales where she just connects people.
All right. Just we want to get to one story real quickly before we move on to the last one, which we're all kind of like salivating over. But I just do wonder if ultimately the $345,000 McLaren 750S Spider might ultimately end up on her website at some point. You drove it. Just give us a quick thought on what that was like.
This is admittedly rare air, so we have to say that. McLaren, of course, is one of the most prestigious names in elite motorsport. We've all followed the McLaren F1 racing team. McLaren hopes that their racing team success and notoriety will trickle down into making us want to buy cars like the 750S Spider. This is the successor to the 720S Spider, and looks basically the same. If you're at all familiar with it, it looks kind of like an alien. It's very swoopy. The cabin is sort of bubble-shaped. And, of course, like any good supercar, it's got over 700 horsepower, twin turbocharged V8 engine. It can go 0 to 60 in 2.7 seconds. And,
Fast.
This is the type of thing that, is like a Ferrari. You can put it on the line against plenty of offerings from Ferrari and Lamborghini. To me, it's a little clinical. McLaren is known for having a bit of a clinical nature to its cars, but if you really love that sort of robotic precision, the 750S Spider is a very fun car to drive.
Okay, from McLaren to Saudi Arabia, there is a connection, we promise. Make that connection for us.
The connection is I did travel to Saudi Arabia to be a part of our Bloomberg Power Players Conference, and this conference was located in Jeddah to discuss the growth of motorsport and other sports in Saudi Arabia. Saudi Arabia has invested billions of dollars into promoting tourism and sports. And Zach Brown, the principal of the McLaren F1 racing team, joined us for the conference, and we were so happy to have him. And then the Saudi Arabian Grand Prix was also held that same weekend that we had our conference, and I was really happy to go and see the Grand Prix, and then also spend some time in other locales in Saudi Arabia, like this hotel in Alula.
So Hannah was going for the Power Players Conference.
Wait, for work?
For work. She was. Well, she was. And we said, Hannah, if you're going to go there, we've got to get you to check out some of these. There's amazing, very high luxury hotels that are, some have already opened, many are about to open in Saudi because, as Hannah said, they've been investing so much in tourism. And so we said, Hannah, let's go check out this Habitas Hotel in Alula. Habitas is a brand which is known for kind of coming out of the Burning Man culture. Their first place was in Tulum. Very free spirit, hippie. Does not feel like it fits in Saudi Arabia, which is famously very conservative. And since Hannah was there, we did all the visa stuff. It's difficult to get into Saudi. We said, go check out this hotel. Hannah understands that Habitas vibe. So it was like trains, planes, and automobiles, but she got over there and she checked it out.
All right. So what was it like, Hannah?
It was amazing. I didn't know what to expect. I had never been to the Middle East, never been to Saudi Arabia, and I had already spent several days in Jeddah, which was wonderful, but pretty conservative. For instance, the hotel pool where I was staying had separate hours for men and women. Men and women were not allowed to be at the swimming pool at the same time. So then fast forward, I flew to Medina and then drove 4 hours into the desert into this old region called Alula. And at Habitas, the pool is a mixed pool, and it was burqas and bikinis, for lack of a better term.
Seriously.
And men and women,
yeah.
which was you can't get anywhere else there.
And I have to say, in Saudi Arabia, alcohol is not allowed anywhere in the country, and that also does apply to this hotel. I didn't know how serious that was. I kind of thought, well, maybe if it's a private hotel and they're calling it, sort of a Burning Man in the desert, there would be alcohol, but no alcohol at all. But I have to say that did not encroach upon the fun and freedom that Habitas Alula had. It was kind of like a boho chic luxury hotel that you would find in Ibiza, maybe.
Is there any question about the success moving forward of this hotel and who it attracts? Like, can it pull this off in such a conservative place?
That is the question. When I was there, I did not come into contact with any other Americans. It's very difficult to get to. My return trip to LA took 32 hours door to door. The visas are challenging to obtain. It's grueling and it's expensive. So those are natural prohibitive barriers to going. Habitas has really positioned these hotels as opportunities to provide jobs for locals. Although I have to say, when I was there, most of the staff that I encountered were from African countries or from other Arab nations. They were not from Saudi Arabia. I just actually heard from the PR that they're saying 29% of their staff are local Saudis. They probably need to increase that if they want to really make an impact in the region. And again, all of this is funded and part of the Kingdom of Saudi Arabia's effort to really promote tourism. They're not short for money, so there's a lot of money being devoted to this.
And it was mostly Saudi families that were there, right? That's kind
Yes. I can't say for sure. The people there, I had a great experience. The people there were mostly Saudis, mostly in traditional dress. There were a few bikinis from what I think were Europeans, from what I can tell, maybe Australians, and then me. But mostly Saudi families dressed traditionally, having a wonderful time. There were people having birthday parties. It was really interesting. So I do hope that it can continue. There's certainly a lot of effort behind it.
And you want to go back?
Oh, I really want to go back. I recommend it to anybody. I mean, it's mind-blowing. It's the desert itself. I have to say, if we have time, it's very close to Hegra, which is kind of like Petra. If you've heard of the tombs at Petra in Jordan, Hegra is a similar site, and it's a World Heritage Site, the first one ever in Saudi Arabia, with these ancient tombs. It's really phenomenal to go see.
Well, the pictures in the story are pretty phenomenal as well, as are you. So listen, thank you so much. Really appreciate it.
That's Bloomberg Pursuits auto columnist Hannah Elliott and the editor of Pursuits, Chris Rouser. Check out more from Pursuits and the entire Business Week team by heading to Bloomberg.com.
We all want to go, don't we? Yeah. Totally.
Yeah, it sounds amazing.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.